Welcome back to Investing Talk podcast. Today we're taking a closer look at supermicrocomputer. Our listener for this discussion wants to quickly get a handle on what's critical about supermicro right now, without getting bogged down in too much detail. Looking for those clear aha moments and just a solid sense of where the company stands. We've gathered some recent analyses and news, and our goal is to pull out the key insights, their business, performance, financials, what's potentially coming next. So let's get started. Who is Supermicro, fundamentally?
Basically, Supermicro provides complete IT solutions, but they're really optimized for specific applications. Their main areas are, well, pretty vital today: servers, AI infrastructure, cloud computing stuff, storage, and also 5G and edge tech.
Okay, so not just building boxes. It sounds quite targeted. What makes them different?
A big part of it is their server building block solutions. It's this modular design idea. It lets customers build very customized server systems for whatever specific job they need, done maybe complex databases, AI model training, handling lots of web traffic, that kind of thing.
Right, the workload.
The emphasis is on modularity. So customers get flexibility, maybe some cost savings too. It's not just mixing parts. It means you can potentially upgrade just certain components later, not the whole system. Think about long-term costs, getting new tech faster. Imagine a data center boosting its AI power bit by bit instead of ripping everything out.
That modular idea makes a lot of sense for future-proofing. And I heard something about them being focused on green computing, too.
They are. They have initiatives for energy efficiency, things like advanced cooling air and liquid and better power management. Plus, they run their own manufacturing in the US, Taiwan, and the Netherlands. Gives them more control over the supply chain, presumably.
Okay, good overview of the company itself. Now, let's shift to recent performance. The stock chart. Well, it's been a bit of a roller coaster, hasn't it?
That's definitely one way to put it. I mean, yes, huge growth over the past year, even the last 6 months. But there's been real volatility lately. A big trigger was that Q3 fiscal 2025 earnings report. The net sales came in below their own prior guidance. They reported $4.5 to $4.6 billion, but they'd guided for $5 to $6 billion.
Wow, that's a pretty wide miss. How did the market take that news initially?
Not well. The stock definitely pulled back after those Q3 numbers came out. That's the recent dip we've seen. But it's important context,
Yeah.
Even with this dip, the stock had that incredible plus 278% run in 2024. And that momentum carried into early 2025.
So perhaps a correction after flying so high. Were there other key events happening around the same time?
Well, apart from the earnings miss itself, they launched a new product on May 13th, 2025, the Microcloud Multi-Node Solution. Uses AMD EPYC processors. And importantly, the company mentioned that some customers were hitting pause on platform decisions. They pointed to economic uncertainty and tariffs as reasons. That was part of the explanation for missing the revenue target.
Ah, the broader economy. Tariffs, we're hearing that a lot. Let's dig into those Q3 financials a bit more. What else stood out?
Looking at the numbers, besides the $4.6 billion sales, GAAP diluted EPS was 15 cents and 17 cents. Non-GAAP was $79.31. Their non-GAAP gross margin was hovering around 9.7%.
Okay, can you just quickly remind us, GAAP versus non-GAAP?
All right, so GAAP generally accepted accounting principles. That's the standard way. Non-GAAP often adjusts things out like one-time costs or stock compensation to try and show underlying operational performance. Investors usually look at both.
Got it. And their balance sheet.
Looked pretty solid on the cash front. $2.54 billion in cash and equivalents. Total debt was around $2.49 billion. So cash almost covers debt.
That gap between the guidance and the actual revenue is still pretty stark, though. And that gross margin, 9.7%, seems kind of thin.
It really is noticeable. That revenue difference, maybe 10% to 20% below the low end of their own forecast? And you're right about the margin. Around 9.7%, well, it does suggest profitability is under some pressure compared to certain peers. On the other hand, that strong cash position relative to debt is a definite positive. Shows manageable leverage.
So a mixed bag financially. Where does Supermicro really shine? What are their core strengths?
They've got several things going for them. Their own tech, like the data center building block solution and direct liquid cooled too, is innovative. They're seen as leaders in AI and cloud solutions, and they have a reputation for cost-effective, efficient servers. Plus, being sort of an agile challenger in this market means they can often bring innovations out faster than some of the giants. That's huge in this space.
That speed to market point seems especially key for AI right now, but what about the potential downsides? What are the red flags investors should be aware of?
Well, that $2 billion cut to their full-year fiscal 2025 revenue forecast is a big one. You can't ignore that. The economic uncertainty and tariff impacts causing customer delays, that's an ongoing risk. And as we discussed, profitability is under pressure with those lower gross margins. Plus, the revenue trends have been a bit up and down, suggesting potential volatility in demand or market conditions.
Okay, so external factors playing a big role, it seems. How does Supermicro fit into the bigger picture, the whole tech industry landscape?
In the server and data center world, they're definitely a significant player. But it's a tough neighborhood. They're up against giants like Dell and Hewlett-Packard Enterprise. The good news for them, though, is the overall industry trends are favorable. Cloud growth, AI adoption, the need for efficient data centers, these all drive demand for what Supermicro makes,
Hmm.
particularly the need for high-density, energy-efficient gear. That plays right into their strengths.
That makes sense. How are analysts viewing the company right now? Seems like there was some positive news recently on that front.
Yes, that was interesting. On May 13th, Raymond James started covering Supermicro, and they came out with a bullish rating, even calling them a near AI pure play.
A near AI pure play. That's quite a statement.
It is, and that kind of positive analyst view often boosts trading volume, puts upward pressure on the price. It also suggests some confidence that they're past those audit issues from last year. And that pure play label, it's not just about products. I think it also reflects how quickly they seem to adapt to the specific hardware needs for AI, maybe faster than some bigger players.
Very interesting label. Let's circle back to that microcloud product launch you mentioned. What are the key details there?
Right, the microcloud. Announced May 13th. It uses those new AMD EPYC 4005 series processors. Comes in two main setups in a pretty compact 3U size, one with 10 CPU nodes, another with 5 CPU nodes plus GPUs. They seem to be targeting organizations, especially maybe smaller or mid-sized businesses, that need to optimize space, energy, and cost for lighter workloads. Think entry-level stuff. They're touting things like potentially getting up to 2,080 cores in a standard rack, which could really shrink the data center footprint and lower the total cost for those kinds of users.
So it sounds like a strategic move to capture maybe a different market segment, the SMB space perhaps. What about the buzz online? Is Supermicro being talked about much?
Oh, definitely. There's been a noticeable uptick in discussion, especially on places like Reddit and X. A lot of the talk focuses on Supermicro being well-positioned for the whole AI hardware boom. But, it's important to remember, as these forums often say themselves, a lot of it is speculative. Talk about future earnings, valuation multiples. You always have to be careful and do your own homework with that kind of online chatter.
Sound advice. Always good to verify. So pulling it all together, what seem to be the main things driving the stock right now?
It looks like a combination of forces. That positive analyst coverage, like the Raymond James initiation, is certainly helping. Their product innovation, especially targeting high-growth AI areas, is creating excitement. And just generally, there seems to be quite a bit of investor optimism about their long-term positioning in this whole AI market build-out. So if you're looking at Supermicro, those are probably the key dynamics to track.
Okay, so to sort of wrap this up for you, Supermicro is a company with deep roots in specialized IT hardware. They're making real inroads into this booming AI infrastructure market. Yes, they've hit some recent bumps. That earnings miss was notable, but these innovative product launches and the positive analyst attention paint a potentially compelling long-term picture. That microcloud launch seems to show they're thinking about broadening their customer base too.
There are definitely things to keep watching closely. The impact of the economy, those tariffs, and critically, whether they can improve those gross margins. But for anyone interested in the actual nuts and bolts, the infrastructure behind AI and cloud growth, Supermicro is a name that keeps popping up. It's hard to ignore.
We really hope this discussion has given you a clearer picture of what's happening with Supermicro. As always, we absolutely encourage you to do your own follow-up research, looking at their official SEC filings, keeping up with financial news, that's crucial. And if you found this breakdown valuable, please do subscribe, like, and maybe leave us a comment. We genuinely love to hear what you think and what other companies or topics you'd be interested in us exploring next time.